All right. Good morning, Rhinos. So let's see what we got going on today, right? So I took a look. Actually, I watch the market all the time, right? So during the day, not so much. I'm always in tune with it. I always have a certain sense of what's going on. At nighttime, though, I really pay attention. Sorry, I'm just catching up right now. It's not that I pay attention in the sense that I'm like studying it and watching it, but I'm always in tune with it, right? Like, so, hey, what's up, Angus? So I'll know the futures. Now, what the futures are is exactly what it sounds like. It's what they predict the future price to be. So at 8:00 p.m. Eastern Standard Time, the futures open, in which case anybody, retail participants, investment banks, hedge funds, whomever, could go ahead and start buying and selling the S&P futures, the NASDAQ futures, the Russell 2000 futures, all the different indexes, and each index has different stocks in it, right? Like the Dow Jones is the 30 biggest companies in America, the S&P 500 is the 500 largest companies in the globe, and so forth and so forth, right? So upon that happening, upon those futures opening, you get a certain semblance of what the psychology, what the behavior, what the belief is that the market's going to do the next day. So last night, the futures opened and they were up like 50, 60, 70 points. And of course, right, like the market just got beat up yesterday. So everyone's like, okay, it got beat up today. It's probably going to go up tomorrow. We need a bit of a rebound. And here's the thing about a rebound. It's one of two things. It's either a V bottom, right? Like it comes down, then it goes up, or it's called a dead cat bounce. Now I own 2 cats, so I think that's a really, really not nice term. But the term meaning when you throw a cat that's dead on the floor, what does it do? Right? It bounces up and then it continues to go down. It hits the floor, bounces up, and will come right back down. And I guess that works with everyone, like a human even, but it's called the dead cat bounce. So whether the market was going to start up today because it was going to, it found its bottom and it wants to go up, or it was a dead cat bounce, the odds were it was going to start up no matter what, right? Because both of those situations both have a market starting higher. So as I'm watching the futures, I then see that like 1 in the morning, 3 in the morning, and they were negative. They were down like 60 or 70. When I say 60 or 70, we're talking about the Dow Jones, right? Like that's how everything's quoted. Oh, the market was down 500. Well, talking about the Dow Jones Industrial Average, right? The 30 largest companies here in America. Then this morning, when I was in the gym and doing my morning routine, I then see the futures are up 60, then 70, then 80, then 120. And I got so frustrated. I was like, oh, we all said together we wanted the market to close really bad down yesterday and then start down today, and that would be the moments we could purchase. And that would be just too opportune. That would be what they call too perfect, right? Like that's the ideal setup. Like if the market opened up today down 1,000 points after being down as many points as it's been over the last 2-3 weeks, then common consensus is even the person that says, oh, I think you always know those people, the doomsayers, right? Like, oh, the market's going to zero, Sonny, and I'll tell you why. Even they would say, okay, I get it. It's down like 3, 4, 5,000 the last couple of weeks. It'll probably bounce, but it's then going to go down more. Everyone would be in consensus that a bounce is coming, and then it's just how far the bounce would go. But it would be a really easy purchase. If we got that set up, I could close my eyes and make 100% of my money within the next hour, right? Like that's how easy it would be. Okay, but we didn't get that. So let's take a look at what we did get, right? Because the last I checked, the market was up, but for anyone that's been part of Rhino Wealth for a year knows that when I'm talking, I have no clue what the market's doing. And that's what also kind of adds to the value, right? It's very easy for me to look at the market like they do on TV. Oh, the market's down 30. Yeah, and I think people's worries over the rate hikes are really tired. Oh, the market's up 100. And the fears have abated. The investors have looked past the rate. Oh, it's down 100 again. And then they realize that rate hikes actually, upon further calculation, might not be good for tech because tech is this, oh, they're up 500. But then tech is such a secular growth company, such a secular growth industry that it does not matter what the rate hikes do. AI is here, computers are here, they're going to go higher. Oh, it's down 500. But to do that, they must finance those companies, and the financing is what they're worried about. And until they can find, you see what I did there? I just went I just took the same exact narrative and made it an optimistic story and a pessimistic story, all dependent on what the market's doing, which is why those that watch CNBC, when I started in the market, I watched CNBC, right? So that's not the wrong thing to do. You do need to learn what others are thinking, right? Like, for instance, most of you could guess my political affiliation, which actually is kind of like, I grew up Republican, I vote Republican, but then you learn enough to know that they're both dirtbags, Republicans and Democrats. So I'm just independent, I guess, right? Like, whoever has a better idea, I'd vote for, right? Point being, when I was Republican, when I identified as Republican, and still to this day, because I do tend to have a more conservative view when it comes to economics and just things in general, right? Like, I believe in systems. I believe in the Constitution, right? I believe that that's law and it's not up for interpretation, right? If you want to change the Constitution, I'm all for it, right? Like, we can change anything you want, but let's go through the course. Let's vote, let's debate, let's open it up, and let's have a freedom of thought and idea. That's who I am. That's what I believe. I do not believe you get to say you don't like something and then start burning down houses and beating people up. Like, that's not who I am. So for that, I identify more as conservative. With that being said, when identifying more as conservative, and still the media I watch is all Democrat, because I want to know what the other side is thinking, not because I want to poke fun at them, but because to understand what those who don't agree with me are thinking, I must understand where they're coming from. If I said to you, hey, listen, you have to buy this stock because it's the best stock, and I give you all the reasons, and I don't know that your father's in jail for selling fake stocks his whole life, and you can't actually believe anyone that says it, and I said something that reminded you of him, and that's the reason you're not buying a stock, well, then I'm doing both of us a disservice, because I'm not understanding why you're making the decision. In fact, I'm assuming why you're making it, and then belittling and berating you for something that doesn't even apply to you, right? Like, say, for instance, you grew up and a horrible thing happened to you when you had your first boyfriend or girlfriend, right? It then stands to reason that anytime you were intimate with someone, you would be like this. Now, what if that person never took the time to understand why you were like that? They would think it's on them. In fact, they would say, you know what? I tried to be with you and you're just incapable of loving and you're incapable, blah, blah, blah. Maybe you're cheating on me, and they would leave you. The point is, you have to understand why the other person's thinking what they're thinking to understand and have that debate. So I always watch what Democratic news is, and it kills me, right? Like, when I watch CNN and MSNBC, they're completely cuckoo for Cocoa Puffs, and that's my opinion. But I think it's kind of becoming facts now, right? Like, if you're the president who had the most votes ever, and you were being accused of stealing an election, it really is, and you stood behind it and said it's the most secure election ever, blah, blah, blah. And now you have a voting rights bill because you're saying the vote is suppressed and you need to make sure that the vote is real. Can you have it both ways, right? In fact, any normal person would say, well, if you're saying that now, it kind of shows maybe you knew something back then. But I'm not even allowed to say that out loud because now I'm like a terrorist to the country, right? So the point is, you must always know what the other person's thinking. So that's a long roundabout story to say that watching CNBC in the beginning is good. You should watch CNBC. You should see that when things are going up the way they talk and when things are going down the way they talk. Because when you are able to see that, you're able to absorb how people react. You're able to see that the market is really, really behavioral. Oh, I feel good today, I'll buy. I feel bad today, I'll sell, right? So when you start watching CNBC and you see, oh my God, they're really like, look how excited they are. I remember the last time they were this excited, the market crashed. Because to be that excited, you have to have a consensus that everyone's that excited so that your excitement is receptive, right? Like, I can't walk around and say, today's the best day in the world, everything's great, 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 if I'm talking to people that are living in an alleyway and haven't eaten in 5 days. That audience is not receptive to that message. So for me to go ahead and say everything's great, I need to have an audience that's receptive. CNBC's audience is stock investors. So if CNBC is disseminating a message that nothing could be bad, it's telling you that everyone that could be invested is fully invested because they're receptive to that message. And you know they're receptive to that message because it's a network. The network has ratings. They monitor those ratings. Therefore, when the ratings are up, they do what they do. When ratings are down, they do what they do. And that's an introduction to actually life altogether, including politics, right? Okay. So when we go ahead and watch CNBC, it's not because we're watching it as a source of actionable information. It's because we're watching it as a source of data, right? I want to know what they're saying because I'm going to use that in my thought process, in my brain, to go ahead and create my own actionable set of things to do. Okay, so I always like to look at CNBC. So let's take a look at CNBC now. Let's see what's going on, right? So I have no idea what's going on in the market right now, but I do know it's 10:10 a.m., which means the market's been up for open for 40 minutes, which means whatever it's doing, it's allowed the suckers to get in, it's allowed the professionals to get in, everyone's kind of positioning themselves, excuse me. And I would say that by 10:30, you would have a certain semblance of what's going on, right? So let's take a look. So let's do a shared screen. Let's move some stuff around, right? Okay, let's open the market. Open the market. And Dow's up 58 points. The NASDAQ's up 120. Sony shares tank over 12% after Microsoft and Activision's $68.7 billion tie-up plan. Okay. Millions of kids fall into poverty. Supreme Court to hear Senator Ted Cruz's challenge to a campaign finance law. This is interesting. Netflix fourth quarter earnings report is usually great for investors, but maybe not this time. That's actually really interesting because Netflix reports earnings tomorrow after the bell. Now, I can't read this because I'm not a pro subscriber because I'll never pay CNBC for like their super duper information. That just means I'm their super duper sucker, right? Like, not interested. But if CNBC is now touting that their earnings might not be good, they're touting it to an audience. The audience would then say, oh, you know, I heard their earnings might not be that good. I'm not going to own the stock. Now, is that because CNBC is really trying to do the best for the audience? Or is that because CNBC might have been given some research that says this is what they should say? And maybe that research was given to them by a banking firm that says, well, we want the stock cheap, so let's just make sure people don't run it up. And the reason I say that is because the stock I actually want to buy is Netflix, because they report earnings tomorrow after the bell. Now, let me talk to you about earnings for a second before we get back into this. Earnings is very important. Once a quarter, which is 4 times a year, companies will come out and give you their quarterly earnings. It's called earnings season. It's a real big to-do in Wall Street because all year you're buying and selling companies based on your data, right? Okay, I heard that people like Netflix, therefore I'm going to buy Netflix because Netflix stock is going to go up. Research by Jim Cramer, right? Now, Tsuruhashi's been with us since the beginning. He knows exactly what we're talking about. In fact, Tsuruhashi, Jim Cramer's charitable whatever is $40 a month. So it's like, seriously. But anyway, oh, I like Netflix. People are buying Netflix. I know people that are on Netflix. The presumption is all these people like Netflix, therefore their earnings are going to be good. Their earnings are going to show all the new people that bought Netflix, right? And if that's the case, then that's the company opening their books, proving that the consensus was correct. Therefore, the stock goes up because it gets revalued. The stock then says, yeah, you guys were valuing us thinking we're only going to hit these numbers. But clearly we showed you we could hit these numbers. Therefore, the stock then goes up in value because the company's worth more money. It's more valuable. That's what earnings reports are. Now, for an earnings report for like a company like Procter & Gamble, Johnson & Johnson, not exciting. What do? They sell soap, they sell pharmaceuticals, things that before COVID you didn't market, right? Like we're in a pandemic and it's the only time in the history I saw that a pandemic has to be marketed. There's marketing for a pandemic. I'm sorry. If there's this deadly virus and there's a pandemic, shouldn't I innately know? Or are you saying that I'm so dumb I don't know how to look around and say, oh my God, this virus might kill me? That's a story for another day. So pharmaceutical companies have been really, really big winners. In fact, Pfizer, who, of course, they're not doing it for profit, went from 40 billion to 80 billion because of COVID. But I'm sure their science was directly what the experts said. It had nothing to do with the bottom line. That 40 billion was just, I don't know. It just happens, right? Anyway, why are you guys getting me worked up this morning? Why am I going into politics and COVID? You guys are going to make me go into that. Oh, so for companies like, I don't know, Procter & Gamble, Johnson & Johnson, it's really not that exciting. Okay, they sold a little more soap. Okay, they're gonna, Heinz ketchup, they're gonna raise prices on ketchup by 1 penny. Whoop-de-doo. But for companies like Netflix, for companies like Apple, for companies like Amazon, for companies like Tesla, those earnings are super exciting because these are the highest growth tech companies. Now with tech, what's the overhead on tech? It's nil because it's all automated, which means when your expenses are low and your profit is high, the name of the game is volume. Can you go ahead? If my expenses are $10 no matter what, like an airplane, right? If the airplane costs the same no matter how many people are on it. That's kind of like a tech company. Their overhead for the most part is the same. It's marginal per new person, like an airplane, right? Like the airplane has the same exact cost, but is it like, what if there's more people and you give out more lunches, right? It's very marginal increased cost per new customer, right? Anyway, same thing with tech. So if a tech company has 10 new customers, all right, cool. 10 new customers times how much each customer makes, subtract out the $10 overhead, that's our profit. Great. What if there's 100 new customers? Oh my God, 100 new customers times how much per customer minus the $10, really $11 overhead. Now that profit is way more than the 10 customers, meaning that the number of new customers is the ultimate determinant of how those earnings do. Therefore, how can you go ahead and realistically handicap what the quarterly report is going to be of a company who's completely dependent on headcount? That headcount is completely dependent on growth rate. Therefore, you have to know the growth rate. And that growth rate is not of the quarter. Growth rate is a trend. Therefore, if we're purchasing a company like Netflix because we believe the growth rate is 10%, we're saying the company's going to be worth this much this quarter, this much the next quarter, this much the next quarter, this much the next quarter, because that 10% growth rate will be 10% all the way through. What would happen to the value of that company if all of a sudden it wasn't 10%, it was like 15%? Well, every single number we were 50% off on. In fact, we were valuing the company this, it truly worth this. Meaning with a tech company, those earnings reports are blockbuster. They are everything. So why are we talking about this? What's exciting about that? Well, this is a little strategy that we have at Rhino Wealth. It's called sell the stock to the suckers. Because those growth rates are so blockbuster, because they're so important to the value of that stock, there are people that are called gamblers. And they go ahead and buy the stock before those numbers come out. Now, those numbers come out after the close of the market. Therefore, when those numbers come out, there's no more trading of options. You can trade stock in the aftermarket and it's flying all over the place, but there's no more trading for the most part, right? The market is closed. The numbers come out. Everyone digests the numbers. The next morning, the stock's either up 10% or down 10%. Now, if you're owning an option contract where you're betting a certain stock to be a certain price by a certain date, 10% movement is everything. If I own a stock at $100 and I'm betting that the stock is going to be $105 by next week, and this earnings report can move the stock up to 110, I'm 5 points out of the money right now. It's 100, right? And I'm looking for 105. But if that stock goes up 10%, it's 110. Now I'm 5 points in the money. How much did I pay for a bet that wasn't even true yet, right? Like, I'm betting this is going to be $5 by next week. All right. It's going to cost you $1 to make that bet. Well, now if it's 110 and the stock is 5, how much is that bet worth? Well, it's worth at least 5 because that 5 points is real value to that. So that $1 just became at least 5, which means I just made 500% of my money by risking it going to 0. Now I know that was overly simplified, but that's options, right? So what we do when it's earnings season is we look for a company that is a high flyer, that has been kicked around a little bit, that sentiment might not be so great for, that has earnings coming up, which means we can purchase it and play for a rebound. And because it's been kicked around, you're going to have the gamblers come out and say, wow, this has really been undervalued. It's really been kicked around. Let's go ahead and start. Let's go ahead. This is a good spot to pick, right? It's down like 100 points. how bad could the earnings be? In fact, the earnings are going to show that the company was actually pretty good. It shouldn't have ever been that low, and it's going to go flying higher. So if we buy that stock before those people come in to buy it, well, then we have a pretty good risk reward. Because we know those people, those gamblers gamble, are going to be there. We know that the option will not get beat up too much, right? Like, for instance, if you own an option or stock in any company, you have the ability for it to go down. You have the ability for it to go up. But if you have a near-term catalyst, you're going to have people that are going to look at it coming down as an opportunity, right? Like, for instance, because it has earnings tomorrow, even though the stock might go down today, people are going to say, oh, it's down, but there's this event that could be really good. So because it's down, I'll take it as an opportunity to get in and bet on that event at a cheap level. It is those people that allow us to cap our downside, or cap our downside, because the belief is it can't go too low. And of course, that's all phooey, right? Like, stocks can go to zero. So I need to say that for legality. Stocks can always go to zero, right? But the odds of it going down are less because there's an event that people want to be a part of, right? So what we're going to do is, let's just make sure that Netflix reports tomorrow. Netflix earnings, right? So all right, so let's take a look at Netflix. When are they? Second quarter earning. Wait. No, you Momo. I want to know. All right, hold on a sec. News and events. Here we go. Financial releases. No, you freak show investor. Okay. Netflix fourth quarter earnings interview. 3:00 p.m. PST. So that's California time, which means the interview's at 6:00, which means that's when the CEO is going to talk, which means the earnings release is after the bell, which means January 20th. Today's January 19th, which means tomorrow after the bell, Netflix is going to report earnings. Okay, we got something here. All right, so let's take a look at Netflix. Now, does everyone know what Netflix does? I think we all know, right? So I don't really need to go into that. Okay. So let's pull up our super duper. Well, actually, where's the market, right? So last time we looked, it was 50. Is it any higher now? Oh, now it's minus 36. So remember that dead cat bounce we talked about? You're seeing it. The market was up 150 this morning. Now it's down 36. Remember the NASDAQ was up 120. Now it's only up 80. Spooky. Now this is actually perfect, because what we believed, why are none of these numbers changing? Let's go, guys. What we believed was that the market is close to a bottom. But to find a bottom, you need people to feel pain. So you need people to come in today, oh my God, the market's going to rebound. Yes, look at it, it's up. And then for it to come back down, and for people to say, fuck, this is the last time I even tried to do this. I'm done. Because it's those people that finally sell, and then the market could rebound. Yeah, I really appreciate if this computer was actually working. Okay, so let's take a look at the spiders. All right, so what we said yesterday was we took a look at, let's put the volatility in this, right? Okay. Actually, you know what? Since we're buying the NASDAQ, let's do something differently. NASDAQ volatility is VXN. And I know this because I've been doing this for years, right? All right, so let's do this, right? So this is the NASDAQ. This is the QQQs, which is the tradable symbol for the NASDAQ 100, which means it's the 100 largest NASDAQ companies, right? Okay, so let's do this old school. Let's just do it together and see what happens. Now, as you can see, I'm deleting stuff. I just pulled this up for the first time. I don't know where this is going to take us, but let's find out. So everything we do, we always want to back check, right? So, okay, so the market's going up here. Cool. The volume is going down. Well, actually, no, right here, the volume stopped going down. Right? You can see that? In fact, you could say the volume's going up. It's up, market's up, volume's up. What is the volatility doing? The volatility is going up. Okay, so what does that mean? Price up, volume up, volatility up. All right, we're going up, but people aren't so super comfortable. And people not being super comfortable does not mean the stock's going to go down. It just means that people are climbing a wall of worry. And what does that mean? When people are worried about something, it's an opportunity because the price of things when people are worried is lower than the price of things when people are not worried, right? Like if I'm worried that all of a sudden gas prices are going to go to $10 a gallon tomorrow, I'm not going to buy a car for $50,000 because I know I have to put money in for gas. But if all of a sudden I'm not worried about gas prices going up, in fact, if all of a sudden the last president was still president and gas prices were only $1 rather than $4, I could buy that $50,000 car because I'm not worried about gas prices. But does that mean the car's not worth $50,000? Maybe I'm worried about gas prices going up and they never do go up, which means the car value that I was unwilling to value at 50 really was worth 50. And as my worry abated, the price of the value of the car went up in correlation, right? So prices up, volumes up, which means more people are buying at the higher prices. When you see that, it's called conviction. But people are worried. That's opportunity. When you see volume and price going up and volatility, it means conviction that's still going to go higher, right? Okay, so let's see what happened. So over here, you see the price going up. Uh-oh. You see the volume going down. That's not good. And what do you see with the volatility? Volatility is still going up. Like you saw it going down over here, but look, it's still going up. So what does that mean? Okay, well, price is going up, but volume's going down, which means people are unwilling to pay these high prices, but they're still going up, but there's less people buying them. In fact, there's more people worried. So that tells you something is around the corner. Less people are willing to buy these prices and more people are worried what's around the corner. What don't we know? Something is coming. We just don't know what it is. Okay. Look at this. Stocks go up even more. Oh my God. Volume goes up. Whoa. What happens to volatility? Whoa. Volatility went flying higher. Uh-oh. So what did we say over here? Stocks go up, volume's up, volatility's up. Yeah, people are worried, but it's an opportunity. Because again, it's only an opportunity. So in that example, there will be a time that someone fears gas is going to $10, then it will go to $10. So how many people over here feared it was going to $10 and we're using the example, right? The analogy, and it didn't. 1, 2, 3, 4. But then finally someone's right. When volatility is going up and you're buying stocks, it's a dangerous game. Because this means people are uncertain. It means people are uncomfortable. It means people are ready to sell that at any second because they're already uncomfortable. It's like you ever have your friend or your sister or someone say to you, oh my God, this drink is so disgusting. Why don't you try it? I'll give you $5 to try it. And you're like, you already are expecting it to be disgusting. By the time you put it to your lips, you're already like vomiting and you didn't even touch it yet because that's your expectations. Your volatility of your belief of that taste is already high. Therefore, that's what that is. Now, maybe you drink it and it tastes like roses, right? Like maybe it tastes like the best iced tea you've ever had. Oh, Frida, my pleasure. And Frida, we record all of these, so just catch the replay later. And it's actually on our Rhino vlog. So you can go to Distributive Marketing and just check it there. Or you could go to our YouTube and check it there. Otherwise, we just send it out tomorrow morning. So you have people volatile. You have more people buying, though. But look how big these bars are, right? Like, you see these bars are relatively small. These ones are big. You know why? Because this is called a short squeeze. Now, I don't want to get too technical, but when people are fearful of something happening, they sell the stock. In fact, they will borrow someone else's stock to sell it, because they believe it's going to go down. So if I short stock, it means I borrow your stock. Let's say I borrow your stock, it's $10. I sell it. I collect $10. Now I'm hoping that the stock goes lower. let's say it goes to 8, so I could buy it back at 8 and give you your stock back. And what did I do? I sold at 10, I bought at 8, I have $2 I put in my pocket, your stock is where it is, and everything went fine. What happens when that goes up though? All right, so I borrow your stock, I sell it at 10. Now the stock goes to 12. Oh, SHIT, this is a problem. I have to buy it back because every point it goes up, I'm losing money. That's called a short squeeze. I'm getting squeezed out of my short position, so I buy it back. Now, what happens to all the people that are short that stock? They all scramble to buy it back, so whoop. But was that real buying? No, it was high volume buying, but was it real? Well, how can you tell that, Ant? Well, you would tell that if you see these bars larger, because it shows an increase in buying, and if you see the volatility up at the same time, the volume's up. If you have all of that, look what comes next. Boom, right? Because that was never real buying. In fact, it is no coincidence that look at this line. It surpassed it and came right back to it because it was never real. So what do we have? Okay, so we have a stock that goes down. Okay, cool. All right, what happened to the volume? Well, it's going down, but so is the volume. As it goes lower, less people are selling it. There's not that many sellers left. People aren't like, get me out of this anymore. They're kind of becoming comfortable. Okay, what happens to the volatility? It's going down. People are comfortable. They're saying, okay, the worst is behind us. So when you have price going down, but volume going down and volatility going down, that's an opportunity. And how do I know that? Because once the selling was done, look at this move. Boom. But what happened to the volume? Uh-oh. It went down further. In fact, on this move, the volume was going down. Volatility didn't go lower, it stayed the same, right? People were still volatile. Now, what happened over here? It went up further. The volume went up, but the volatility went up. Here we go again. People were never believing this move. So what happens? Boom, 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 boom. Look at the, we're going to get to the point, right? And not that there's a point, but it's just education. There's a boot camp. Look at that price movement down. And as it's moving down, look at all this volume. Look at all these people selling. Look at all this volatility. That's crazy. People are scared. The thing is telling you a story. You saw it this whole way. Okay. Oh my God, guys, what are we going to do? All right. Okay. Let's figure it out, right? Okay. Price is starting to rebound, but how can we believe it? Well, the selling stopped, but the volume's going down. But volatility is going down. That's good, right? People are becoming less volatile, and the volume is going down. So it looks like people are just leaving the market and it's just drifting higher, right? Because this is not a believable move. There's no one buying it. This is not believable. Therefore, you knew it was going to run out of steam. And look, it did. And I bet you when it ran out of steam, the volume picked up. Look, there it is. People were waiting for an opportunity to sell because they never believed this. They said, this is fake. I don't want anything to do with it. When it gets up there, I'm going to sell. Which is why they were so comfortable this whole time. They weren't crazy. They knew what they were doing. They were waiting for it to go up so they could sell it. That's why the volatility was coming down. Okay, so what happened here? All right, but we rebounded. The stock's up. Is it though? Uh-oh. Look at the volume. Uh-oh. Look at the volatility. We just saw this, didn't we? Stock up, volume down, volatility down. It means people understand what they're doing. They're waiting for it to get to a certain price so they could sell it. Okay, so let's take that. All right, price up, volume down, volatility down. They're waiting for a certain price so they could sell it. Look, it's the same exact thing. Boom, down, boom, volume up. Look at all these people selling. Now, what's the difference here? The volatility is going up, right? And actually, you could kind of see it going up here, but it went back down. But now it's making new highs. It's going higher. Now people are actually getting scared. They're saying, okay, we thought we knew what was going on, but now we're scared. Okay, so let's find out where they are. All right, so it rebounded, it went up. Cool, yay. All right, stocks went up. I hate my life. I'm sorry. Apparently I live in an office that's located in 1800s because no matter how much I pay, I can't get in service to work. Apparently Wi-Fi just doesn't work here. So anyways, let's get back to this before I start cursing and yelling. All right, so here we are, right? So the market, so this is going down. Right, okay, thank you. And here we go, it's going down, right? The market's going down, but what's happened to volume? It's not going up, it's not going down, it's just staying. And volatility is going up. Okay, so volume stagnant, stock going down, which means people are waiting, they're absorbing these prices. They might go lower, but they're absorbing this. Now, where are we? Okay, it looks like we're at the lows of the day. The volatility looks like it's coming in a little bit. Now look at our indicators, right? We're getting to the point that money's coming in, it's becoming a coiled spring. I would say that it is my belief that we're going to have a short-term bottom here. Can we get a chart that summarizes these moves? It'll be a memory aid until I actually understand. Yeah, absolutely. So there we go. We went ahead and screenshotted it. We're going to Rhino Premier, which, by the way, everyone, I'm going to just put this in the chat. If anyone's not in Rhino Premier, you should be. So Rhino Premier was what Rhino Welt before Rhino Welt, right? It's the same thing. We just retitled it. And what I'll do is I'll put that in here. All right. And it's right at Deb because I love Deborah from Celebration, Florida. Okay. Huh. So what this tells me is that we're getting close to a bottom. In fact, I would say that we're getting towards a near-term bottom. So let's see what the stock market's doing. Oh, yes, the Nasdaq's up only 27. The Dow's now down 50. Anyone that got in today that thought the market was going to be up, got the market up, the market's coming down. Now they got to go ahead and say, all right, do I believe this? Like, did I sell? And now they have to look like idiots. That's the way this works. People that bought have to feel stupid. And they do right now. So let's go to our Netflix, which reports earnings tomorrow. So let's pull up Netflix, right? Now, Netflix, okay, so let's do the same exercise. Netflix is going down. I guess we could pull up. I don't think I have a Netflix volatility, right? Well, let's see. Let me see something. So how do I do that? So it's, hold on, I'm trying to see if I have something. All right, so can I do VX Netflix? See, I could do. You know what? Is Amazon and Netflix the same? They're not. So let's just do VXM, whatever. Let's go back to that. Okay. So this is the NASDAQ volatility. Okay. So now this is the volatility for all of NASDAQ. We're obviously looking at just Netflix, so it's a little different, but kind of the same. All right. So stock is going down, volume's going up. Volatility is going up. Not good. Stock is going sideways. Volume is going down, right? Volatility is going down, which means people are just waiting to sell. Okay. Stock's going down. Volume was going up, right? But let's go ahead and move this a little bit, right? Let's make this a little more accurate. And volatility is going up. Okay. What happened yesterday, though? Remember the market yesterday was down like a bazillion points? And this was down, I know. But what was the volume? That volume was down in a big down day. Yeah, volatility was up, but the volume was down in a big down day. So I'm going to buy Netflix. We have a 15, we have a red, we have a green. Now Etsy is a 16 red and green, but I just don't believe it enough. See, Netflix has the extra kicker that they report earnings tomorrow. So let's see what we're gonna do. All right, guys, let's go buy some stock. All right. So Netflix is, see, this is always the moment, right? All right, so Netflix, let's see what you got, buddy. So let's go. I have E-Trade, so I'm gonna look up Netflix. And of course, no matter what buttons I press, E-Trade just wants to piss me off. All right, so let's go to Netflix. Now they report earnings tomorrow, which means conceivably we could buy earning. I'm not doing the weeklies. That's just too much. And what I mean by weeklies, we could buy an option that expires Friday. Now, because we know we're going to sell it tomorrow, actually, let's not do that. Let's do it for the month, right? Let's be responsible adults. All right, so February options, which means this option has 1 month. It's a contract that's going to last for 1 month. Stock is now 512. All right. Let's go ahead and get more strikes, right? So let's do all strikes. In fact, let's do February 11th. So we have a little bit less time. Stock is 512. Let's say we do 525s. See, Netflix is super expensive. You know, since we're playing for a rebound, let's just go to February 4th. We're going to sell tomorrow no matter what. All right. It's 512. Let's say we do the 525s. Let's do 520s, right? Actually, where's the volume today? Where's everyone buying? So now these are option contracts, and this volume shows us where people are buying, and nobody's buying those, but they're actually buying the Januaries. Now, January, these are the ones that expire this week. This expires Friday. Look at that. Somebody, look at all this volume today. People buying it. I mean, this is, if you, I can't do it. These are going to move very quickly. All right, so let's be a little safe, right? Let's do February 4th. 520s. Let's just buy these. Let's buy the 525s. All right. Yeah, maybe. All right, let's buy 525s. Now, okay, so we want to buy to open. Now you see this is the bid and ask. You want to go ahead and put your price in the middle of it because you don't want to pay the ask. You hope you pay the bid, but you're never going to get it. You want to put it in the middle. So 1625 plus 1790 is 3615 divided by 2 is 1807 and a half. So let's say 1810, right? No, that was wrong. 1710 is what I meant. 34 divided by 2, right? Okay, so 1710. All right, which means each contract is going to be $1,700. So let's buy 5, right? 6. We'll use half the money. All right. Now let's preview the order. Estimated price. Let's place the order and see what happens. Uh-oh, we have bought the stock. So let's go ahead and take a look at orders. Take a look at executed. And what you will see is we just bought, and I'm typing this, Netflix, February 4th, 2022, $525 call options. And we bought 5 of them. And we bought it at $17. And see what that was? 0.833. It was kind of exactly halfway. All right. So that is our purchase today. And we're going to leave that alone. Oh, so now what do? Okay. So we want to make 40% on our money, right? So we take 17.083 times that by 1.4, and that comes out to $23. So let's go to our portfolio, $23.91. See, we're already down because we stink. So now let's say we want to close this position. Now we want to sell all of these, but we want to do it at a limit. The limit price is going to be the price that we set. So we want to sell this for a 40% profit. Now, it doesn't guarantee that we are, but if it ever gets to this price, it'll sell automatically. That 40% profit is $23.90. It's really 91 cents, but let's do 23. Now, do we want to do it good for the day? No, let's do it good for the next 60 days. Now, this will be good for the next 60 days, but we are selling this tomorrow. So let's preview the order, place the order. So now if we take a look at our orders, we have one open. We are going to sell these Netflix options at $23.90 if it ever gets there. Now it has to get there for this to be triggered. Now, presumably this will be triggered if Netflix goes up in value. Now, the reason we only bought half was because what if our position's down tomorrow morning, right? If our position's down tomorrow morning, did anything change? Think about it. Why did we buy Netflix? We believed that the market was getting towards and getting close to a bottom, right? The near-term bottom, which means, could it be today? No. But if we believe we're getting close to it, maybe it's tomorrow. And if it's tomorrow, we definitely want to be there. We don't want to say we were a day early. Oh, gosh, darn it. Oh, phooey. We want to still be there. It's because Netflix is right in front of earnings. Those earnings are tomorrow after the bell. Does that change tomorrow morning? No, it just means that it's closer to it. And if it's down, it means those people that are gamblers are really going to come back in. And if the stock is lower, it means now we can go ahead and buy exactly what we bought, but at a lower price. And if we could buy something at a lower price, aren't we happy for that, right? So all of those things considered, we're only putting half our money in today, because if this moves lower tomorrow morning, we will buy the other half tomorrow morning. So let's take a look at the stock. So what we can see, well, let's take a look at the market, right? So what happened? Now the market's down 37. Remember what it was before? Now think about all the suckers. So let's go walk through the market for a moment, right? So we have 11 minutes left. Let's go ahead and close this, and we're going to do the actual market, the S&P. Well, the market, like I said, the Dow, but the S&P is what all the professionals use for the market, because that's the 500 largest companies, not just the 30 largest in the US, right? Okay, so you are a market participant, right? So you bought stock here, it sold off, and you're like, you know what? The market's going to go up. I'm not affected by a little sell-off. Phooey, right? I don't do that stuff. Okay, the market goes up. You look pretty smart. See, I got BALLS. I'm not afraid of the market. It goes down, and you're like, well, I just told everyone I have balls, right? Like I can't sell now. Oh my God, this is bad. All right, I'm in it. I'm not going to sell here. It comes back up, right back to where I was. See, it taught me something. I would have sold. I would have lost that money. I'm right back to where I started. Why don't I just be a long-term investor? I don't even need to look at this stuff. It goes down again. Now it comes back over here. Oh, I should have done it. Should have done it. Now it goes higher than it ever was. You look like a genius. Yeah, buddy. I've been in it up, down, left, right. I'm smarter than you. Now it's coming down, but it comes back up. Yeah, I know it's gonna come back up, duh. Now it's coming down and it came back up today. And now it's going down again today. The point is, when does that scare someone? When do they say, you know what? I'm out. I'm not doing that again. It should have been up and it was up and it's already selling off. Here we go. It's going to be another sell-off. It's just selling off, selling off, selling off. Okay. Well, look at the volume of the S&P. As it's going down, the volume's going up, right? So that's not good. Volatility's going up. That's not good. But is it getting close to the end? Well, we don't know that, but on the QQQs, which is really ground zero, because if you take a look at the QQQs and compare it to the SPY, what you'll find all right, so if we take out all this stuff, your mother, sorry, not your mother. So what you'll find over the course of the last, this is December, right? What's the date of this right here? December 1st. Since December 1st, this blue line is the S&P. These black lines is the QQQs, right? The NASDAQ. The NASDAQ's down 4%. The S&P is actually up 1%. So when you see that the NASDAQ looks like it's done selling and it's the NASDAQ that's been leading the S&P down, that gives you the extra. When you looked at the S&P, you saw it going down, but you saw the volume going up, which is bad. But this is where our minds come, this is where our brains come. Well, is it the S&P that's leading the downside? Is it the S&P that's the tail? Is the S&P the dog or the tail? And right now it's a tail. It's following the market. The market right now, the dog is the NASDAQ. The NASDAQ's the thing that's going down. So if we see the volume for the NASDAQ abate, it's not going higher, and we see the NASDAQ trying to find footing, and we see these things are really overextended, and we pick a stock in the NASDAQ that's overly sold with a big event coming tomorrow, I kind of feel like we have some stuff going on here, right? So nothing is guaranteed. Nothing is like this is going to work or that's going to work. But some things are higher probabilities than others, right? What is, now this is the most important part and we're going to leave it off here. What is our game plan? Because this cannot change, because what we say right now, we have to do. If this is lower and nothing's changed, right? Like it's not like the CEO all of a sudden got caught diddling little kids and that's why the stock's down tomorrow, but the stock's just down. It's just down. We're going to buy the other half. That's a fact. We are going to do that. Tomorrow, they report earnings after the bell. No matter what, whether we're up, down, left, right, sideways, I don't give an F-U-C-K. We are selling the stock before earnings because you know who stays in for earnings? Gamblers. I don't know what their earnings report's going to be. I don't know if they're going to tell me that their whole lineup is garbage or that they see that people are. Think about it from the pandemic. Do you think Netflix will ever do better than they did in the pandemic where you were forced to stay home? No. Netflix did really well. Think about what every other company did. HBO, Paramount, Hulu, Peacock, they all came out with their versions, which means the competition's never been higher in the face of an economy that's never going to be as great as it once was for this company. So the company, I imagine, is probably going to talk about that, and they'll probably say, but this is our answer going forward. Is that answer going to be a good one? Because if it's not, the stock's going to get annihilated. But if it's a good one, the stock will go up a lot. People will say, oh my God, I was so worried. For what reason? I shouldn't have been worried. Look what happened. There's a lot of smart people there. Reed Hastings, the CEO, he's phenomenal. Now, what they just did Friday was they announced that they're going to be raising prices $1 across the board over the next 3 months. The stock went up, I think, 15 points, and then it closed up 6 points. I think the stock was $5.25. It's now $5.12. So we got that for free. Like we're buying it under the price of the announcement. But what does that mean from a company perspective? If you can go ahead and raise prices on your customers, you're saying two things. One, you think growth might be a little bit slower going forward. Duh. But two, that your customers are so loyal that you could charge them more and they'll still stay with you. If that's the case, then you can tell a good story. hey, our customers are so loyal, they're staying with us, we're still adding people, not as much as we did, but with this new money, we're gonna be able to create even better content, and our customers are gonna love us for it, and we're building something that no one even knows is happening. It's gonna be bigger, bigger, brighter, blah, 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 blah. That's a good story. Now, tomorrow, if the market's up, you'll have a lot of analysts come out. All of a sudden, they're the smartest people in the world. Yeah, you know what? The market's up, and we see Netflix up. It was an opportunity yesterday. If you could have bought Netflix at 500, you're a genius. And we're buying Netflix because we believe their earnings are going to be really good. That's what's going to be said if the market's up. If the market's down, what's going to be said? Oh, you know what? Big tech, it's really having a pullback, and it's going to be a real test tonight with Netflix, and we're going to see how the market reacts. Maybe it's going to fly, maybe not. We don't really know. If that's the story, people are going to say, well, I'll take a shot at it. Why not, right? The point being, we believe we have a floor. We might lose money on this, right? Like, people need to know that. But do I think I'm going to lose more than 30% of money on this? No, I don't, because I know I have a floor. I know I bought it at the right time. I know that I did all the math. I did the calculations. I waited. I obviously am well versed in what's going on here. Do I believe I will make 40%? I believe if the market opens positive tomorrow, which I believe it does. In fact, I believe the market closes positive today. I think there's a good chance we make 40% before the end of the day. I think there's a much higher likelihood we'll make 40% by tomorrow than it is that we'll lose money. And I say we, which is inappropriate because I have no ability or anything over your money. I say we because I always talk about we. I talk about myself as we because I'm a Gemini and I have 75,000 different personalities. So when I say we, I'm talking about Anthony Rhino, Anthony Roberts, Anthony Calishow, and that's what I'm talking about. So it's 10:57. We're going to send an email right now to everyone, letting everyone know this is what we purchased. And tomorrow we will see you at 10 o'clock. We have the sell order in, which means it's automatic. It's not up to me. I will not press the button. If I happen to look at this later and it's up 30%, I'll just sell it then, because there's no reason I'm going to risk for 10 more percent. But if I do, I'll let everyone know, obviously. But what you can see is the sell order's in. My hands are off. Let's see what happens. And if it goes lower, we are in position to buy more. So, God willing, let's see what happens. But I absolutely love everyone. We're going to put the recording up. We're going to mail everyone as well. In fact, I'll wait for the recording to be done before I mail so that I don't have to mail twice, because people don't want to hear from me that many times. I mean, they should, but I don't think they want to. So I love everyone, and I'll see you all tomorrow. Bye.